Hello, folks. Welcome to Pro Trader Strategies. My name's Eric Wilkinson, and this is Spotting the Trade. We're going to get you what you need to know before you go, and that's going to start out with the economic data, see how that impacts the overall markets, talk about some market analysis, and then round that off with some option strategies we could implement into our portfolios based on this assumptions we come up with in these market analysis type of videos. Anyway, before you go, smash the like button, please, and don't forget to subscribe. All right. So across the pond, it is a Monday here and across the pond still. So we usually don't get a whole lot of economic data. It's really just going to be a carry through of what we saw from the geopolitical spectrum in the world, and tensions are still high. Folks, we're talking about slowing global growth right now, and I've been talking about this for quite some time when we're looking at folks and trying to price in stocks. As a matter of fact, that's going through my the options guide to trading options. We're really drilling down on volatility and different option components that really drive pricing. Well, one of those things we talk about is, can you tell if something is cheap or expensive? And that is the defining factor, right? Whether or not you want to buy something or sell something, if you can determine if it's cheap or expensive. Well, folks, in the markets right now, we're having a real conundrum, right? Because stocks are priced in with forward multiples based on what we expect the economy to be doing. Well, right now we're starting to see some kinks in the armor of the U.S. economy and economies abroad. So all of that said, if we start seeing slowing growth, that's going to cause all of these multiples to come off a little bit, right? If we don't think that they're going to be doing as well going forward, then we have to cut back on their multiple. That means their price for their stock is way overpriced, and tech is in that boat right now. And we've talked about this, the shift from tech into things like E-mini S&Ps. We're even seeing it shift into Russell, which is a little bit more risky if you ask me. Those are going to be weak hands, because when they buy whatever they're buying or they trade whatever they're trading, that is going to be a shorter duration trade. When it starts going to go against them, they're not going to have the staying power they would in something else. So, and especially a name they really are backing. Well, with that pullback, it gets exacerbated. Another thing we're seeing is these hedge funds have tendency to jump in on some of the same trades. Well, that's what we're really seeing right now, and they are starting to liquidate. That's going to really push us even further to the downside. Now, what are we seeing right now? Even crude oil coming off a little bit today. We've been talking about this last week. The strength in some of the manufacturing sectors, that was going to drive this market higher. One of the things that we're starting to see, though, we're seeing the manufacturing sector with the PMI numbers, these forward-looking indicators, they're showing that they are still buying there. So there's a bit of a disconnect here. We're starting to see some slowdowns, other areas of the economy, and that manufacturing sector still seems to be thinking that we're going to be cranking out a good economy going forward. So a bit of a disconnect there right now with what we're seeing in the economic data and in the markets here. Now, bonds look like they're trying to find a bottom. This is a candle that I really like to look for in any type of market setup. It doesn't matter what it is. If I'm looking at a chart and see a massive down swing here, bearish moves, lower lows continuing there. We're getting lower lows, lower highs, all the way down to where we get this at the bottom of a move. Now, a confirmation is what we would need to see here on any type of trade going forward right now, folks, because the way that we are just getting the volatility, there is no real follow through, despite the fact that sometimes we are seeing some bottoming patterns here in the markets. I'm going to really be waiting for confirmation. So we need a green candle to finish above the previous day's high for us to get a real shift in momentum here. Now, we'll probably have to have a few more of those, because we've gotten those dead cat bounces that I've been talking so much about. Also, don't bite in on these little pops thinking that you're going to catch this falling knife. It's probably going to cut you guys. All right. So wait for confirmation. Wait for all of this volatility to start coming out, because at this point we are in a bearish trend, and there's nothing right now, folks, that looks like it's going to get us out of this, right? in the next week or so. So I would not be trying to catch a falling knife right now. Gold finding a little bit of a support here. Weird that gold is falling out of bed with, we're talking about struggling economy going forward and stocks with multiples that probably are unachievable. Well, if the stock is not going to be able to achieve that multiple, that means that that stock is overpriced, right? So we're going to see that come off a little bit. With that said, as we see money flow, we should see money flow out of riskier assets, that being equities, and into something where it's a retainer of value, which is what we generally would call gold. That's not happening right now. It's more of a cash grab, which is strange in an environment where we're seeing interest rates rise because of inflation. And if inflation is moving higher, if you're holding cash, that means you're losing money to inflation. So a little bit of a strange disconnect here from the general levers and pulleys that we would normally see in the overall markets. All right, Bitcoin, another one that I would expect to find a little bit of buoyancy here with the market sell-off, as folks are going to be looking to find those retainers of value there. All right, we finally came down on Friday, tagged these numbers that I was looking for, 12,500. Bit of an ugly day, but we needed to test those areas. Now they're really getting pressed. Now, this is a measured move off the 2016 low to the pandemic high. So I have then the Fibonacci extensions based on that. You can see they fell through pretty nicely, but we are revisiting those pandemic highs there in the NASDAQ. Again, E-mini S&Ps finding a support level right here at that 32,300 is what I called. You can see that the Fibonacci numbers a little bit lower than that, but we were looking for 2,300 for that area. Well, we've come down tweezer bottoms there. Now, tweezer bottoms are pretty solid bottoms, generally speaking. Not really much of a setup here for technical analysis, but that tweezer bottom is something that most folks will be keeping an eye on there. Third time through, if we get a little bit of a bounce, that's usually what folks will say, is that you get the third time through, meaning a bounce, and then that's when we really start breaking down. So don't get caught jumping in early, especially on this type of market action that we're getting right now. E-mini S&Ps, again, finding that support right there at 4,000. Again, we were talking about those markets coming down there, finding those lows from those tweezer bottoms. Again, it's usually a pretty solid sign when we find those tweezer bottoms, especially at previous market highs or very significant areas. Like that pandemic high was a very significant level. So that being revisited, that would expect one to start thinking, all right, pandemic low, are we really thinking that the world is that bad? Well, most people probably nibble a little bit around here, thinking that we aren't going back to that type of economy. That would be an opportunity to take advantage of. So are we going to bounce here? I don't know right now. I'm not going to jump in full tilt, but opportunities abound in selling some puts. We can get another 10% lower from where we currently are to start adding stocks to our portfolio through selling puts. All right, that's the only way to really get that incremental move lower and get paid for it. And I talk about that in these videos. As a matter of fact, we just did the short put one on Thursday, so please go to Pro Trader Strategies at YouTube and check it out. You can find me there. Don't forget to smash the like button and subscribe so that you guys can get in on when we're coming live with these videos. All right, something that I want to start throwing in here is Lyft. You guys know that I'm trying to get out of my Lyft trade. I've got a working order to get out of my May 17.5 puts in there for 10 cents. All right. But a couple of things I just want to flip through the markets. You can see tech sector will be doing not so great. Listen, folks, if you're in NVIDIA, literally all you need to do is chart Bitcoin because it is directly correlated to that. Disney looking like we're going to try and find a bottom here. We need to wait for that confirmation on trades like that. Target, again, looking like we're going to find a bottom there. So some of these, Target, Walmart, Kroger, some of those staples that we were going to continue to shop at, those type of brick and mortars I think are going to do very well. Is Deere or Caterpillar? Probably not. Cummins probably not going to do very well. So I'd stay away from names like that. Tech, as you can see, has been the one that has been the real sell-off. Now, Colgate Palmolive, this is one of those that I said, hey, this sell-off is a little bit strange. I don't think people are going to stop bathing. And we caught that upside bounce there when we were talking about selling some puts in the options for a nice little bounce, high volatility. We didn't really get the volatility coming out of this trade, but we are getting the directional move. It's right there at that point of control. Anytime the markets move to a point of control like this, folks, that is what we are going to be looking for a trade. Because what happens if we're trading at the same levels that we've grown accustomed to, there is no angst to get in and out. So folks, we're going to probably settle down in and around this area or try and cover the gap between that area there. So no real downside risk in my eyes in this trade. So that's why I was looking to sell those puts, and that's why I was a little bit more aggressive without doing a put spread going to the nakeds. If I could get a level down here where I could buy Colgate Palmolive, which is lower than where the pre-pandemic levels were, then I'd be more than happy to grab something like that there. Because I personally don't think we're going to go back and revisit that type of slowing economy, if you will. I don't know why I switched off of that. I wanted to flip through a couple of more trades here real quick. Colgate Palmolive's up. I thought that was crude oil for a second. ABT, I'm going to try and miss the ones with earnings because those are the ones we want to trade. And when I'm flipping through these, folks, I usually don't even look and see what the stock is. I'm just going and kind of grabbing whatever doesn't have earnings and look for opportunities for maybe a topping pattern. Not really a great one there. Uber, I think Uber and Lyft are at levels that could be a place to start nibbling there. We've got Nike with a nice little bottom there. There's some real bad news coming out of China. They're taking some heat on their labor that they're using. Got United Healthcare making a bit of a move there. So again, a lot of these names that we've been talking about with the staples would be where I would first start to look at adding. I would not be looking into tech right now. Those multiples are very frothy at best, and with a pullback there, that's going to continue to start causing the rest of the chips to drop. We talked about the hedge funds getting a little bit jukey here. Their margins are getting pressed right now. That means that they might have to start covering. All right. That's what we'll usually see when the margin calls start happening, is folks will have to start covering those trades. We see that all the time in gold. As the volatility starts spiking, they start raising margins on things like gold. We start seeing pullbacks because folks need to cover positions because they don't have the extra cash on hand to cover those margin calls. All right. All right, that's all I got for you guys. Keep your eyes out on the market. Wait for confirmations right now. Any breakdown is going to be continuation to the downside. Not really seeing any break in pattern from continuing to see lower lows and lower highs. All right. So before you go, please smash that like button. Don't forget to subscribe with the bell. The bell tells you when I come in unannounced. So make sure you got that going. All right. Hope everybody had a great Mother's Day. And if you can't take that, take it easy.